Hello amazing traders, and welcome to my YouTube channel once again, and my name is Forex. And in this video I'll be doing breakdown of market analysis for what happened throughout the market last week and how it has affected traders, what happened. First of all, let me ask you, hope you did not blow your account, because these days throughout the month of August, market was in serious consolidation, especially to those who are trading minor pair like GBPJPY like me. It has not been funny at all. Can you see this? Market has been moving in sideways for a long time. Since 25th of July, this market has been doing serious sideways. Then there was a break of structure here and market came back to it again, and since then. But hopefully this is the month of September. So I believe that in this month of September, something exciting is going to happen, because this market has two choices now. It's either this market breakout of this breakout, once it retests here, then there's high potential that market is coming to at least this key level before any form of reversal. At least once market breakout of this key level retest, at least market is coming to somewhere around here first, at least as a form of checking the previous. And this is something that is going to be exciting. How many people is market planning if market can break this key level? This is 732 pips. Yeah, 732 pips. But it's going to be taking like, once market break this level, this resistance level, and turn it to support, 700 pips is inevitable. But until that time, it is called watch and pray, because I was expecting two analysis that I did, I think 2 weeks ago. I thought this market would break this level, but it was a serious market manipulation as a result of news. The market maker just came in and swept up a lot of accounts, including mine, which wasn't funny. But right now, we can say that market has actually formed in, like, not that perfect, but at least head and shoulder, inverse head and shoulder chart patterns. Yes, market has been able to form head and shoulder inverse. Market has been able to form inverse head and shoulder chart pattern. And if that is the case, what it simply means is that there is high tendency that this market will actually break out in the next few weeks. Hopefully this coming week, we don't know yet, because this is the neckline. And if this is the neckline, and so as long as market did not break this level, this support level, and retest it, then this buying side is sure. But if market break this support level and retest it, then it means that at the end of the day, sellers are able to successfully push down the market, because right now this is here we are. So as long as next analysis, as long as market do not reverse and break this trend line, we are good to go. But if market break it and retest it, then it means that this market is actually in a serious sell mode to this level. And if something like that happened, how many pips would that be? That would be 1,100 pips minimum. That is be 1,100 pips minimum. But based on the law of chart patterns, and these chart patterns happened in daily time frame, so there is high probability, because remember, every strategy that works is based on probability. As a trader, your goal as a trader is to understand your risk and reward through the law of probability, that when you place trade, how many trades can you place? If you place 100 trades based on your strategy, at the end of everything, are you profitable? Those are the most important questions you need to ask yourself, because remember, if anybody telling you that they have higher win rate, it means that their risk to reward is extremely low. If you have lesser win rate, your risk to reward must be extremely high. You cannot have higher win rate and higher risk to reward. It's not possible. What am I trying to say? That is, higher win rate leads to lower risk and reward, whereas lower win rate leads to higher risk and reward. What does it mean? It means that to those who used to claim that they have higher win rate, it means that their risk to reward is extremely small. Most of them are less than 1% or 1:1, maximum 1:2. But when someone have a lower win rate, it means that their risk to reward must be extremely high. So someone that is using lower win rate must be having average of 1:3, 1:5, and the likes. And most of the time, people that have lower win rate will not be trading every day, because for them to see the analysis, it takes time. It takes time. So that is why most of the traders that belongs to higher win rate and lower risk to reward are scalpers, and sometimes maybe inter-day trader. Those are the two sets of people that are in this category. These are the two sets of people that are in this category. But lower win rate, higher risk to reward, you must be what? You must have a patience. You must be patient. You must have patience. You must have discipline. You must understand the law of consistency. Because if you have a lower win rate and you are just clicking buy and sell every time, it will affect your market. It will affect it. So right now, this is GBPJPY and this is daily time frame. Now this is 4-hour time frame. Right now, the best thing is to fold our hands and do nothing until market break this key level. If market can break this key level this coming week, it means that GBPJPY is now in massive buy side liquidity, in which I trust maximum of 2 weeks, maximum, market will load this 700 pips finish. That is GBPJPY for you. Because on average daily range is in between 150 to 200 pips. So if market move, let's say Monday to Thursday by 400 pips, on Friday and market sell with maybe 100 pips, that is 300. By second week, GBPJPY will reach this key level. So it's 2 weeks analysis, as long as market is not in ranging session. In fact, if there is high volume in the market can do this in 1 week, because 200 pips in a week, 2 times 5, that is 1,000 pips in a week. So which means that between Monday to Wednesday, market can actually move these 700 pips. Yes, that is it. But for we that are trading choppy market, your risk management must be on point. You cannot afford to be clicking buy and sell every time when you don't know what you are doing. And I know trading is hard. It's extremely hard. Don't let anybody tell you that it is easy. If it is easy, there will be more successful trader than unsuccessful trader. But like every other thing in life that is hard, being a banker is hard, being a lawyer is hard, being a financial analyst is hard. So also trading is hard. So what does it have to do with you and I? It simply means that if you want the money, you will suffer for it. You will pay the price. Once you pay the price, and you will get result, and the result will be extraordinary, amazing. So in this coming week, let's see what market reaction. If market can break this resistance level and turn it to support, based on the law of chart patterns right now, that shows us that we are having inverse head and shoulder, and there is high probability that this market has entered massive buy side. Let's go to another analysis apart from this one. Let's go to GBPUSD. This is GBPUSD, and this is also daily time frame, 4-hour time frame. And this is non-farm payroll of yesterday. This was the news that happened yesterday, and both CAD and CAD USD yesterday was almost completely news from 1:30 p.m. 3 p.m. for almost 2 hours. CAD was there was a massive volume. So because of non-farm payroll and unemployment rate and average hourly earnings, this was the effect on GBP USD, and market was able to move. This market, so this was the news. This was the news effect as at yesterday, which was Friday. Because of that, market was able to push to this key level, but eventually it sold back. This one was as a result of there was no news though. This one was on Monday, and let's check our calendar. On Monday, I was surprised. This was on Monday. This was on Tuesday. As at Tuesday, the only news that happened was 3 p.m. It is that before 3 p.m. there was no single news. And what time did this market happen? This market happened early in the morning, around 8 a.m. in the morning, 8 to throughout the entire day of Tuesday. There was a massive sell. Market was just dropping it as if there was news, and it was rampant on every other page, including my favorite page, GBPJPY. There was a massive sell without news, without nothing. Until 3 p.m. there was no news. So the 3 p.m. news also now enhanced it. But so this was yesterday news. This was non-farm payroll, and it was positive because most of the analysis market has already been ranging and some of them were selling before. So the news enhanced the new direction of the market. Inverted and shoulder chart pattern also played out. It means that there is high probability that 214 pips also will be coming here, at least in between 200 to 214 pips. We also check it here in the next coming week on GBP USD. So what does it mean? If once market break this level, this resistance level, where there was a rejection yesterday, and it turns to support, then we are good to go for the next coming week. The last market that we are going to run analysis on was USDCAD. Oh my God, I run the analysis I think yesterday, before the news yesterday morning, and I was like, this market will actually sell, because the reason why I said the market was going to sell it was simple. This momentum, this is not volume. You can see that there was a volume here, there was a massive volume, there was a volume here, there was a volume here, there was a volume here, but here you can see that there was no momentum. So I just plot my key levels. Unfortunately, I just plot the Fibonacci key level at 0.5 to 0.618, which is the golden ratio of Fibonacci. I'm like, okay, what is going on here? And here is what happened. There was a massive rejection at the golden ratio. There was a massive rejection at that level. And the next thing was that market dropped. USDCAD, because of the news also, non-farm payroll news, there was a massive drop of volume. And as a result of that, those who trade USCAD yesterday, who understand a lot of Fibonacci, will be able to make a lot of money until market reverse back eventually after the end of the news. But we cannot trust this reversal yet. In fact, the best way of picking this reversal is not here. The best time to pick this reversal is either you wait for market to come to this key level and drop it again, or once markets break out of this level, retest again. It means that this Elliott wave, it means that this market direction has been broken. If market can break this key level, once this market buy to this key level, it's going to form double top. If market can break it to this golden ratio and retest it, then it means that market has moved from down. So it simply means that market has moved from selling side to buying side. Also in gold, wow, gold also, I had to plot my key level yesterday because it has been a while I came to see good analysis, and right now this is good for you. Gold has touched all-time high frame yesterday, all-time high frame, so all-time high as of yesterday, and this is where we are. So gold has done it again. So the best thing is to wait for this market, is to wait to see, to those who will be trading good, to see what this market will do, because this is the best thing to do. The best thing is to examine the market's reaction. So if you can wait, it will be a perfect entry setup. Since market has been doing higher low, higher low, higher high, if market can come to this key level as form of higher low, then higher high also will be added. And let's pick out Fibonacci key level to see high probability of this market. So there is high tendency that gold is coming to this key level, which is 0.05. If gold can come to 0.05 and bounce back at the golden ratio, then this is high probability that gold has moved again one more time as usual to something spectacular. So you can see now that we are how I am combining co-integrations of different strategies, because this channel trading is a strategy on its own. Drawing this market movement is a strategy on its own. Understanding the psychology of candlestick is a strategy on its own. Support and resistance is a strategy on its own. Combining all of them together to now form a decision before placing buy and sell is one of the best things you can ever do. So what am I trying to say? That is how trader works. You do not just make decisions on feelings or market is selling or buying. You run the analysis. You check your risk to reward. You examine how much you can win and lose. You examine where you are entering the market and when you are exit, because like I used to say, the best form, your strategy is not as you think it. Your strategy is good to a level of where you are entering the market and when you are exiting the market. Let me say it again. Your strategy is as it is best performance when you know where you are entering the market and when you are exiting the market. So which means that it is an error to enter market, put stop loss, and do not put take profit. That market can wipe out. In fact, because if you miss that trade and market gives you a level of money and you missed it and it come back to your stop loss and drive you out, that one can send you apart 3 weeks down the line. And those are the things that affect innocent traders. So to the next volume, I'll be expecting this market reaction once market, so that I can release another video to see market reaction and update you guys till I come your way again next time. Thank you for watching to the end. Be safe.